G'day, Andrew Alpert from the Anywhere Business Network. So you want to try and make a profit when you're in business. Well, what you have to do once you've done your marketing plan and everything else like that is ensure that the margin that you make in between what the goods cost or the services cost and what you're selling it for will make a profit. You also need to consider volume of how many sales you will produce. Well, you've got that sorted, you've got a margin. The next thing is to look at those costs. Well, you've got all those fixed costs that you've got, telecommunications, the cost of the goods that you're purchasing, the costs of training and such like. Well, they have to be covered by your sales, of course. Then you've got your own personal living costs. You've got to be able to carry on. Those are factored in as well. After that, you tend to get what sort of sales volume you need to produce in order to sustain your business, or what the break-even point is. Now, you've done all this, and then the costs start behaving differently. What do I mean by the cost behaving differently is that your previous fixed overhead costs like telecommunications and office expenditure and things like computers, printers, those sort of things in your office tend to start escalating. You might have to outsource a person to start doing your social media. You might end up having to get some customer relationship management software in there. So you actually can look at your clients and follow them up, because after all, they're your clients, they're your goods, and you want to keep track of them because you really care. So you do that so that the fixed costs are in steps. Once again, that has an impact on your sales volume, so you've got to increase your sales volumes. And of course, once again, the cost of sales is in that particular equation. Sometimes you then start having cash flow squeezes, and those at particular times of the month or at particular times of the year. Your overheads still have to be covered, so there could be those seasonal factors. A couple of weeks ago we had a US election, for example, and a lot of people in the US stopped spending because they were uncertain. Well, that gets covered in your pestle analysis that we've done earlier, or your environmental scan of what's happening on the outside. So you can see that the cash flow forecasting is tailored for you, your product, and what you're doing. So it's very important that you get that right, because after all, you don't want to go broke. You want to try and succeed. And if you've got the mindset to succeed, carry it through by doing a little bit of planning. Alrighty, hatches.